Hello and welcome back to Market Vibes by CA Connect, where I will be presenting to you on the recent developments in Sri Lanka's macroeconomic indicators. So starting off with inflation, we see that inflation in Sri Lanka has continued to remain very much under control, with inflation measured by the Colombo Consumer Price Index being recorded at negative 0.8%, which is deflation on a year-on-year basis in October 2024. Likewise, in the National Consumer Price Index as well, deflation of 0.7% was recorded for October 2024. The central bank's inflation target is 5%, and they remain committed to maintaining this target over the medium term. Moving on to interest rates, we see that most of the interest rates, especially the 12-month T-bill, has adjusted downwards after the presidential election, whereby end of September 2024, it was around 10.05%, but currently it has dropped down to 9.78%, which is about a 30 bips decline. The average weighted prime lending rate, which was at around 9.32% by the end of September 2024, has also declined and is currently at around 9.08%, while the average weighted deposit rate is at 7.61%. Looking at the exchange rate, the LKR continued to strengthen against the USD over the last few weeks. During October 2024, we saw the LKR appreciating by around 2%, whilst in November 2024, we saw it appreciating by around 1%. And it currently stands at around 291 rupees to the US dollar. However, we note that the LKR is likely to witness some pressure in 2025 as dollar outflows are likely to increase with the external debt restructuring being completed and debt servicing recommencing. Plus, the government of Sri Lanka is also looking at relaxing the vehicle import restrictions in early 2025, which should also mean that the dollar outflows from the country could increase in 2025, adding to some pressure on the LKR. Looking at our gross official reserve position, by the end of October, we had reserves of close to $6.5 billion, which was an increase of 8% on a month-on-month basis. This is roughly about 4 months of import cover. However, as highlighted with the LKR's strength, the pace of reserve accumulation that we've seen over the last few months is likely to slow down in 2025 with external debt servicing commencing, plus the removal of vehicle import restrictions. Looking at our trade account, exports grew by about 4% on a year-on-year basis to US dollars 1,012 million in September 2024, mainly due to the recovery in textile exports by around 16% on a year-on-year basis. Imports increased 11% on a year-on-year basis to $1.6 billion in September 2024 due to a 31% increase in consumer goods imports and a 37% increase in textile-related imports. Also, investment goods increased by around 51% on a year-on-year basis. The trade deficit for the month of September was recorded at $634 million, whilst the deficit on the trade account for the cumulative period, the first 9 months of 2024, was recorded at $4.2 billion. Net services exports improved by about 11% year-on-year to $2.8 billion for the first 9 months, mainly due to the improved activity in tourism. Looking at tourism more closely, we see that tourist arrivals have started to pick up as Sri Lanka gears up for the peak season, which starts around November and goes on to about March 2025. In the first 20 days of November, we saw 120,961 arrivals, and we've seen the daily arrival numbers pick up quite significantly over the last few weeks to about 6,000 tourist arrivals per day in the last few days. Moving on to worker remittances, we saw the October numbers stand at around $588 million, which is a 14% growth year on year and 6% growth month on month. Again, we are moving into a seasonal period where remittances pick up closer to the festive season in December. And finally, moving on to the capital markets, the Colombo Stock Exchange started to pick up after the presidential election. The ASP rose by about 19%, and the S&P SL 20 has risen by about 25% since the presidential election. The new government's actions to restore investor and business confidence by providing clarity on the economic policies and continuing to move forward with the IMF program and the external debt restructuring supported this recovery. And with that, we will wrap up the Market Vibes segment. Thank you very much.